This bill doesn't add anything to the United States government's deficit. It doesn't collect revenue that would go to Fannie and Freddie.
CBO,
So that is not what the CBO said, that the score goes to the money that is collected by the GSEs, Fannie and Freddie. This isn't going to pay down the debt. It isn't going to service the interest. It's not going to do a damn thing except go to Fannie and Freddie. Unless somehow FHFA continues to do what they've done, which is siphon the profit off of the GSEs, which they confiscated and nationalized and took away the equity that was there, and then fund their own operations out of it instead of letting them build capital so that they can exit conservatorship.
It's an interesting way to try to deny what CBO stated, that there's a cost to this bill.
If you talk about CBO, why don't we trust them? When we passed student debt takeover, the federal government took over student debt as part of Dodd-Frank, they said that the federal takeover of student lending would save $63 billion. The reality is we're expecting defaults of around $500 billion. Why should we trust CBO?
Well,
they haven't earned it.
Why do we even ask for a CBO score if it means nothing? Because CBO was invoked quite a bit during the debate on the, debate over the debt ceiling. I don't know, Ranking Member Waters, do you want anything to add?
Well, simply to say that we all abide by pay for now.
Right.
I mean, led by Republicans. I mean, I don't like it, but that's what we do. And I'm shocked to have Mr. Davidson come in and say, let's just ignore it in this instance. We don't have to agree to pay for it because of I have my thoughts about what I think this bill is, and what I'm trying to do is convince other Republicans that somehow wealthy people are being charged a lot more money to offset what they're not getting from middle-class people or people with less money. I tell you, all you have to look at is you have to look at those who don't have a 20% down payment. They get mortgage insurance. And right now, and before this change, the cost of their fees and mortgage insurance was higher than what people who have 20% or 30%. And now this equalizes everything.
Good afternoon, friends. Happy Wednesday to all of you. The Federal Reserve is moving forward to tackle inflation. Officials are pushing to raise interest rates even higher. This may be done in order to prevent a recession in the United States. This week, you may want to check your bank or mail, as thousands of Americans are set to receive bonus rebate checks. My dear friends, please do me a big favor and watch until the end of this video. Also, friends, this coming Friday, I will be announcing several winners for the Walmart gift card giveaway. If you'd like to enter these weekly giveaway, friends, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you watch and then comment on, my dearest friends, the greater your chances of winning the giveaways. Federal Reserve officials pushed to raise the Fed's key interest rate by 1/4 of a percentage point at their meeting last month to intensify their fight against high inflation. However, the central bank ultimately decided to forego a rate hike. At the same time, a majority of officials signaled that they expect to raise rates twice more this year, once more than had previously been expected. In their quarterly economic projections, the policymakers also forecast higher inflation and modestly stronger growth than they had envisioned in June. Those upward revisions are a sign that the economy has been more resilient than Fed officials have expected. The Fed's aggressive streak of rate hikes have made mortgages, auto loans, credit cards, and business borrowing increasingly expensive. Many economists describe the message from last month's Fed meeting as a very blurry one. But on the other hand, the central bank chose not to raise borrowing costs. Jerome Powell said at a news conference that the Fed was slowing its rate hikes to allow time to assess their impact on the economy. On the other hand, the officials' forecast for 2 more rate hikes suggested they still believe more aggressive action is needed to defeat high inflation. And Powell said more rate hikes are likely this year. Speaking at a panel discussion with other top central bankers last week, Powell suggested that the bottom line is that interest rate policy has not been restrictive enough for long enough. Many economists expect the Fed to raise rates at every other meeting as it seeks to pull off a difficult maneuver, such as raising borrowing costs high enough to cool the economy and tame inflation, yet not so high as to cause a deep recession. Powell has said that while a hike at every other meeting is possible, so is a prospect that the Fed might decide to raise rates at consecutive meetings. Economists and Wall Street traders consider a rate hike at the Fed's next meeting in 3 weeks to be all but assured. The Fed staff economists have continued to forecast a mild recession, but for later this year, though they said the possibility that the economy will continue to grow slowly was almost as likely as a downturn. So, dear friends, what are your thoughts about our economy here in the United States? Please let me know what your thoughts are in the comment section below. Montana state income taxpayers may notice extra money in their bank accounts or a rebate check in the mail this week. The Montana Department of Revenue will begin issuing rebates of 2021 individual income taxes to over 530,000 qualifying Montana taxpayers. The department anticipates distributing most rebates by the end of August. And best of all, taxpayers do not need to apply for this rebate. Governor Greg Gianforte said, "Montana residents overpaid their taxes, and we are giving it back. We have the important job of getting these rebate checks to eligible Montana taxpayers as quickly and easily as possible." Rebate checks will be sent to qualifying taxpayers either electronically via direct deposit or by paper check to the address on the return. All taxpayers must have had paid income taxes to receive this rebate. Specifically, qualifying taxpayers are those who filed a 2021 resident tax return and 2020 resident or part-year resident tax return by October 17, 2022. Also, qualified taxpayers cannot be claimed as a dependent on another person's taxpayer's tax return. The rebates are equal to the amount of a taxpayer's 2021 taxes, up to $1,250 for single people. Married filing separately and head of household filers will receive $2,500. The rebates are equal to the amount of a taxpayer's 2021 taxes, up to $1,250 for single people and married filing separately. Head of household filers and people married who file joint returns will receive $2,500. The individual income tax rebate is a result of the legislature passing and Governor Greg Gianforte signing House Bill 192 during the 2023 Montana legislative session. Earlier this year, Governor Michelle Lujan Grisham and the legislature approved 2 types of rebates for its residents, one for taxpayers and one for individuals who are not required to file taxes. New Mexico taxpayers should be receiving their income tax rebates, up to $500 for single filers and up to $1,000 for joint filers this month of July. Well, dear friends, if you are a resident in one of these states, please make sure that you receive your rebate checks. Well, my amazing and most beautiful friends, that is the end of my daily stimulus update video for this afternoon. My dearest friends, to say thank you for being part of this community and for joining me here every single day. I will be announcing several winners this coming Friday for the Walmart gift card giveaway. If you'd like to enter these weekly giveaway, friends, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, my greatest friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed week.